So Walmart had great numbers. We know that they've had great numbers, right? They have momentum. Macy's didn't do so hot. Tapestry, yikes, that was bad with Kate Spade. Dillard's wasn't so good. So when you look at that, some people are confused. Is the consumer strong? Is the consumer not strong? What does it tell you?
The consumer is very strong.
Okay.
Unemployment's the lowest it's been in 50 years. Employment's the highest it's ever been. Non-supervisory wages are rising more than 3% a year. That is a healthy consumer. They're not over-levered. There's nothing going wrong with the consumer. There's plenty going wrong with mall-based retail. The problem with that is people aren't going to the mall. They're not going to the mall, not because they don't have any money, but because they're not happy with the shopping experience. They're buying online, they're buying from Walmart, they're buying from Target, they're buying from Amazon. Who would have ever thought that Amazon, Walmart, and Target could all be doing well at the same time? That means somebody's losing one heck of a lot of market share.
And maybe it's Macy's. But you've also said that Jeff Gennett, Macy's CEO, is doing a lot of the right things. But you wouldn't know that if you looked at the stock price performance.
You wouldn't. Jeff is doing the right things. Yes, Macy's has got too many stores and they've got too big of boxes. But he's going through and putting in all kinds of lease departments in the boxes. He's got off-price going into the boxes. They're doing the right things. They're growing nicely online. They're doing well in mobile. It takes a lot of money reinvested to do that. Macy's will be the last man standing in department stores. But they are tied to the mall, and mall traffic's dropping about 7% a year and has been for 10 years now, and it's not going to change. That's going to continue to happen. We've got 1,200 enclosed malls, and we only need about 600 enclosed malls. Macy's is doing the right things. We're just not sure that's enough. And think about it. What are they paying, like a 7-8% dividend now?
Right.
That's no danger to that dividend. These guys have great cash flow. They buy back stock. They're doing all the right things, and yet it's not enough for the marketplace.
That's true. Okay, so help us do some homework for what's to come next week. We've got a lot more retailers to report. It sounds like you think Target's going to turn in a pretty decent report. Is that because they're doing the right things, because the consumer is strong, a combination of the two, and what does it mean for everybody else?
Longer term, I like Amazon and Walmart better than I do Target. Shorter term, they've done all the right things. They've gone through and increased their contribution from online. They've invested in online. They've invested in sprucing up the stores. They've done a little better job with stockouts. They've done retailing 101 and the strategic part of it pretty well. I still think they're a small player. It's hard to say that of a really big company in that space. And I think that it's hard to compete against Amazon and Walmart when you're trying to do it online and out of stores, because Walmart owns the stores and Amazon owns online, and they're both trying to own each other. That's hard if you're in the middle of it. So longer term, I'm not as optimistic on Target, but I'm sure optimistic for now because I believe that all three of those players I just named are gaining market share, winning the game in the minds of the consumer.
Okay, so we shouldn't be worried about the consumer. The consumer's fine, but they got a lot of choice, so you got to up your game to get those dollars.
And you shouldn't be upping your game if you're investing in retail on the mall. People in the mall are losing traffic. They're losing footsteps. They're not well positioned to play online. That's going to be tough if you're a mall-based retailer. And a lot of these people reporting next week are mall-based retailers.